Jewish Capital EPO 3 Part 2. The Hidden Side of UN, IMF, WHO, and the Digital Control Network. Let us examine how this structural influence operates within specific international bodies. First, consider the World Health Organization (WHO). During global health crises, the WHO acts as a central coordinating body for vaccine distribution and policy recommendations. Yet, major pharmaceutical developers behind these treatments are heavily backed by institutional asset managers like BlackRock, Vanguard, and state funds. While the WHO maintains an official stance of neutrality, its policy guidelines are deeply informed by major public-private health initiatives. Second, consider the International Monetary Fund (IMF). During sovereign debt crises across developing nations, the IMF provides emergency loans conditioned on high interest rates, spending cuts, and market opening. Historically, these interventions have led to the privatization of valuable state infrastructure, allowing foreign investment funds to acquire key assets at distressed valuations. Many of the primary architects of these structural adjustment models were prominent economic advisors trained in Western financial centers. Third, consider the United Nations and its specialized agencies. Through Security Council veto mechanics, major powers shield themselves and their partners from binding sanctions. Furthermore, bodies like the UNHCR, UNESCO, and UNDP receive indirect funding from private philanthropic foundations, influencing regional priorities. Ultimately, what is the reality of the so-called international community? Major global decisions often reflect the execution of consensus among concentrated financial, health, and technological networks, rather than neutral intergovernmental debate. Under the banner of global standards, these frameworks evaluate national policies, applying pressure on non-compliant states through aid, suspension, or economic isolation. Understanding this dynamic requires looking beyond official declarations. We must analyze whose strategic interests are reflected in UN resolutions, who profits from WHO policy directives, and who acquires sovereign assets following IMF interventions. While traditional capital focused on physical assets like land or gold, modern capital centers on data, algorithms, and institutional control. At the forefront of this shift is the deployment of algorithmic finance. BlackRock's proprietary risk management platform, Aladdin, analyzes and executes trades across trillions of dollars in global assets in real time. Sovereign bonds and equity holdings of major corporations worldwide are integrated into portfolio models managed by these automated systems. Simultaneously, major digital platforms that gather global user data share deep ties with venture capital networks. By controlling data flows across billions of users, these systems hold unprecedented capacity to predict behavior and shape public consensus. Furthermore, an infrastructure of digital identity and central bank digital currencies, CBDCs, is currently being established globally. Two core technologies define this emerging framework. First, Central Bank Digital Currencies (CBDCs). Central banks worldwide are testing CBDC architectures. Once implemented, these systems allow real-time tracking of individual transactions and spending patterns, diminishing the anonymity of physical currency. Second, digital identity frameworks. From digital health passports to biometric verification, international bodies are promoting unified identity standards. When digital identity systems integrate with central bank digital currencies, they form a highly sophisticated digital credit and compliance system. This creates a refined, automated mechanism capable of monitoring economic activity. The ultimate goal of this evolution extends beyond mere asset accumulation. It aims at establishing a durable governance model, where capital once sought control over banking. It now seeks to manage data flows and structural systems. The vision is a global framework governed through compliance norms, algorithms, and institutional standards rather than direct conflict. How should sovereign nations navigate this shift? While the efficiency of digital platforms is undeniable, The fundamental question remains who controls the underlying infrastructure. In a digital era, sovereignty is determined by who owns the data, algorithms, and financial networks. Nations must critically evaluate whether they maintain independent control over their core data systems. Despite the historical dominance of this global financial order, visible fractures are emerging as the world transitions toward a multipolar alignment. First, the rise of alternative trade mechanisms poses a direct challenge to the dollar-centered financial framework. Nations across the BRICS alliance are expanding local currency settlement systems for energy and commodities, as bilateral trade shifts away from SWIFT and the U.S. dollar. The institutional authority of the IMF and World Bank faces growing competition from new development banks. Second, public skepticism toward globalist institutions is intensifying worldwide. In the aftermath of recent global crises, public pushback against centralized mandates from the WHO, IMF, and major asset managers has grown across Europe, Latin America, and Asia. Attempting to dismiss all structural critiques through traditional media channels is increasingly ineffective in a decentralized digital environment. Third, new geopolitical power centers are advancing alternative economic models. State-backed capital initiatives, such as cross-border infrastructure programs, offer alternatives outside traditional Western financial networks. Nations like India and Saudi Arabia are leveraging their domestic markets and energy wealth to pursue independent investment strategies, rather than relying solely on established financial intermediaries. Fourth, in response to these shifts, major capital networks are rapidly pivoting toward frontier sectors, including artificial intelligence, digital assets, and climate technology. Asset management firms and global foundations are rebranding their initiatives around sustainability and public-private partnerships. While the branding evolves, the core strategy remains centered on controlling critical gateways in technology, energy, and biotechnology. In a multipolar era, we must analyze capital based on its structural impact, rather than its national origin. The unipolar model of globalization is reaching its structural limits, requiring all global actors to demonstrate transparency. Sovereign states must evaluate their financial, technological, and industrial independence to maintain autonomy in a rapidly changing world order. In our next episode, we will examine the relationship between Zionism, messianic politics, and the ideological frameworks shaping modern global discourse. If you found this video insightful, please like, subscribe, and hit the notification bell. Thank you for watching.